every company is going to need high quality financials and financial reporting. So we know going into an engagement, and this is done during the scoping and discovery process, so making sure that we have good playbooks to do a lot of these, you would call it like basics or needs to have on the finance side, making sure that we can approach those things with rigor, making sure that we're bringing in best in class information, making sure that we can leverage information from other clients, and making sure that we have good playbooks so that our people can come to the engagements ready to rock, able to execute very quickly and add value to our clients.
Welcome to the Build It to Billions podcast, where we guide successful entrepreneurs and investors on the journey from millions to billions. We believe that the key to scaling your business and compounding your wealth starts every day with a mindset of stewardship over ownership and applying billionaire principles. Our ultimate goal, to help you scale and compound your wealth so you can give more or all of it away for maximum impact. I'm your host today, Brett Swartz, and in every episode, we feature some of the world's top entrepreneurs, millionaires, and billionaires. They share their principles, values, secrets, and wisdom, providing each of us with the insights we need to reach the next level of success and impact. I'm excited about our next guest. He's out of the great state of New York. He's a collaborative leader with over 10 years of experience in finance, technology, and operations. And he's a part and founder of Expo Group. They are financial experts focused on bridging the gap between founders and investors. This is going to be a unique episode today. We're going to be talking about building a trusted advisory team. Please welcome to the show with me, Eric Fiegoli. Eric, how are we doing?
I'm doing great. Thanks so much for having me, Brett. Excited to be here.
Absolutely. For our listeners getting to know you for the first time, would you give us a little bit more about your story and your current focus?
Yeah, sure. So, like you said, I was grew up and born and raised in New York. I have done 2 tours of duty. I currently live in New York City. I started my career here and then left for a little bit, spent some time on the West Coast, living in Seattle, spent part of my career, first part on Wall Street and working at 2 investment banks. And then after grad school, spent some time on the West Coast working at Amazon. And now, since founding Expo Group, back on the East Coast, living in New York City, have a wife and 2 children, and our office is located, we're in Manhattan, and I live in Brooklyn, so which is nice, really nice place to be.
That's awesome. Yeah, I was just in Brooklyn about a month ago for a family office club event, which is pretty cool. Cool spot. I never had been there before. I've only been in Manhattan, but all that being said, I love the background and want to take one other step back before we dive into the expertise here of building a trusted advisory team. I believe we've all been given certain gifts, and these gifts have been given us to be a blessing, help to others. What would you say is Eric's like superpower gift, strength, maybe from a young age you noticed or people noticed around you, and how does that gift help how you help and bless people today?
I think for me, what I try to do is at every part of my life, and this was, I think, not intentional, but at this point it's I've realized that something that I can do is I try to take something with me. I try to take either people or an experience from everything I've done and bring that with me and use that in the future. So at this point, having worked and grown Expo for the last 7 years, I've built a really good network. And I try to be a good connector, not always expecting anything in return from that, but I try to be a good connector in terms of connecting people with other people that they might find helpful. I try to bring engagements or people that I've worked with prior in my career and continue to loop them in. And I found that over time begins to serve itself and has become really valuable for us as we built the business, because as you move around within the ecosystem of the lower middle market and work with growth stage companies, they need all sorts of different things, not just advisors or finance teams. They need lawyers, they need good first time hires, they need good engineers, and so I try to make sure that I'm using my network to the best of my abilities and help people that I work with.
Awesome. Absolutely love that. I think it's perfect literally for what we're talking about today, which is building a trusted advisory team, right? And it's no surprise that you're the founder and one of the founders of Expo Group. By the way, you can learn more about Eric Fiegoli by going to expogroup.com. That's expogroup.com. So Eric, diving right in, what is the number one secret to building a trusted advisory team?
So for us, in terms of what we do, we're a very people-centric business, and that's like most consulting firms or advisory firms. So we don't make pencils, we don't make widgets. We're really selling, our expertise and our advice, and The biggest thing for us is building trust with our clients, and the way that we do that is just providing really good and honest advice. We have a team that is experts across, I would say the main kind of pillars within what you would say under the office of the CFO, so accounting, finance, and tax. And we have a team that has a lot of experience working with growth stage businesses, supporting them through a range of different things that can range anywhere from, just core accounting all the way through budgeting, fundraising, and ultimately being there and being their team through all those different elements within the life cycle of their business. So for us, most important thing is, I look to hire really high quality people on my team, people that are interested in working with growth stage businesses, and people that are interested in making sure that their day is different every single day and are open to the challenges when you work with businesses in this part of the market.
Okay, got it. So the number one secret is people-centric business, right? You're selling your expertise and advice and being able to build that trust and building a team of people that have these expertise, finance, accounting, tax, budgeting, different areas, and that high quality of people to help serve that. Is that a fair summary so far?
Absolutely. Yes. I mean, that is the key for us, is making sure that we have all the people on our team that can meet the needs of our clients, and that are well equipped to suit any problems that they might have or challenges that might occur. And then our job is to build that team for our clients and put them in the right place to succeed.
Okay, so let's talk about that, right? What's the number one secret to making sure they're in the right place to succeed once you found that they've experienced the background, they're the exact fit that you want? What's been the number one secret to making sure that everyone's working as a cohesive team and filling their role for the high level of service you're providing?
That's a great question. I think for us, and I wouldn't say we've necessarily been great at this, in the beginning. But now that we've been doing this a while, I think putting in good process in place. So making sure that we have good playbooks, making sure that we have good process for things that we know that almost every company that we work with is going to need. Every company is going to need a budget. Almost every company is going to need high quality financials and financial reporting. So we know going into an engagement, and this is done during the scoping and discovery process, but we know that and also clients are coming to us because they need that. So making sure that we have good playbooks to do a lot of these, you would call it like basics or needs to have on the finance side, making sure that we can approach those things with rigor, making sure that we're bringing in best in class information, making sure that we can leverage information from other clients, and making sure that we have good playbooks so that our people can come to the engagements ready to rock, able to execute on getting very quickly and add value to our clients, relatively soon within the engagement.
Okay, got it. So that makes sense. So that it goes down from people and it goes to processes, right? Great
Yeah.
playbooks, and making sure that you have the people in the right seats to be able to execute on that. Yeah, budgeting, financials, reporting, that makes sense. Okay, great. What's the number three secret that comes to mind when it comes to building a trusted advisory team?
Yeah, I mean, I think for us, I think one thing that we've been able to leverage, and it only kind of gets better and better. But as we've grown as a company, as we've worked on more engagements, as we've seen more, our team is, one, become more experienced, but two, we're able to leverage a lot of the information from prior engagements. As we have a bigger portfolio of clients, we can leverage scenarios that have happened to other clients, to those new situations, and that makes us stronger as advisors as well. If we have a client that has gone through in a particular vertical, gone through a fundraise, or has a challenging situation in terms of, let's say, customer retention, or they're having challenges with sales, we've experienced all of those issues before. And that allows us to be good advisors and help them think through, okay, what are their options here? How do they come out of this looking good? How do we come out of the situation in a position of strength? Do we need to, cut spend? Do we need to rejigger what's going on in terms of how we're incentivizing salespeople? Is there a product market fit issue? All of these things that our team can help diagnose. We're using information like anyone else. We're using pattern recognition from prior experiences, and that the more that we've done, the more we're able to leverage going forward in new engagements.
Okay, this is awesome. We're going to dive into this here a little deeper. And by the way, you can learn more about Eric Fiegoli by going to expogroup.com. That's expogroup.com. Trusted advisors, providing their clients with vital expertise at critical moments of growth, and they're really focused on bridging the gap between founders and investors. And so, Eric, when you're referring to that, I'm curious. You know, the a case study of this, right? So give me maybe like a real life case study where all of a sudden this kind of came to life because you're like, oh man, like we learned the hard way, or hey, we learned a great way because this works so well. Can you kind of give us a real life example and maybe even connect it with technology or AI or what's going on now with the world that's changing rapidly with that?
Sure, I can give you an example about that, and I think let me kind of just frame this. We had a longtime client that was with us for, I think it ended up being about 5 years. They ended up, for us, there is sometimes a point where a client then goes and hires an internal CFO, but we can stay with clients for a very long time, sort of prior to that. But this is a client we worked with for over 5 years. We helped them through 3 rounds of fundraising, a seed, a Series A, and Series B. And they have gone through multiple iterations in terms of their growth, and also their needs have changed drastically as their company scaled. This is a technology company focused on building and providing courses and training for those in the caregiver industry. So it's a very underserved industry traditionally, and there's a lot of gaps that need to get filled in terms of helping these people get the proper training to succeed in their roles. This company we helped them through a large raise, and prior to that, prior to their fundraising, they were having trouble on the retention side, on the customer retention side. So one thing that our team was able to do was do some cohort analyses to find out and figure out, okay, what is the right customer mix then, and which cohorts are doing better, which cohorts are more sticky, and which cohorts are churning. It's kind of a core finance activity that you see, especially in technology or in businesses that have recurring revenue or contract-based revenue. But looking at cohort analysis begins to tell us what are the profiles of the customers that are being retained within this business. And we started to look at the types of care agencies that they needed to work with to retain those businesses, and started to realize that it was some of the bigger care agencies that they were working with that they were retaining, and they needed to refocus their sales efforts on only those larger businesses. They were getting a better ROI for their sales efforts. They were retaining them more, and the smaller businesses were really not retained well. That helped them transform their sales function deeply and to refocus their efforts only on businesses where they were going to be able to retain them for the long term and that were a better product market fit for their services. So that ended up being a huge success for them and ultimately led them to some more significant growth planes, which was
Yeah,
very helpful in their fundraising.
yeah, I think that's so spot on. I mean, it feels like oftentimes we may not know, especially as the entrepreneur or as the business owner who's in it every single day, what's actually working best, right? What's our
Mhm.
highest and best time of capital, investment, people, what are the missing pieces? And so if you can help diagnose and uncover profitable initiatives, right? Profitable actual closes, and then just refocus the effort. I mean, the 80/20 rule kicks in, right? And it sounds like that's what you're able to do, and then drop the 80%, focus on the 20 most profitable, and redouble their efforts there. Is that a fair summary?
Yeah, I think so. And for us, it's like we tried, our team, it's a hard role because we have to get the basics right too. We have to get the, basic accounting close right. We're often making sure we can get things like budgeting right. But we try to play also on the farther right portion of the spectrum in that we also have the ability to be a strategic finance team for these businesses. We can also help with a lot of the analyses that they either may not know or may not have time to complete, because they're a growing business. The CEO is often focusing on two main things, which is growth and hiring. And they have a lot of great product people, but they may not have time to do some proactive analyses that will help them, like you said, focus their efforts on the things that are important, that are going to get them the best return on their time and investment. And which for a lot of the growth stage businesses that we're working with, time really is what is the constrained resource they have. Sometimes they're burning cash. They may not all be profitable. So they're really up against the clock to try and grow in order to get another round of fundraising, or get to their next sort of milestone that they need to get to.
Okay, cool. Thank you for sharing that. Let's move into secret number four, the question I haven't asked you yet, right? Like, what would you say is the next step in the process of building a trusted advisory team, and or how you guys are serving that next step after you have the people, you have the processes, you're identifying either roadblocks or things that are holding you back from really redoubling your efforts on things that are making the sense on the 80/20 rule. What would you say is the next step in this that helps you to build that trusted advisory team?
So for us, we're at the point in our business and size where we have a really good team in place. We have a great group of managers and folks that are excellent on the client relationship side. I think for us, we're always looking to what is the next thing that we can provide to clients that we know that they need as they hit their next stage of growth. And we've been pretty good at building or I could say incubating other verticals within our business. For example, 2 years ago we didn't have a tax group in house. And that was something that was important for our clients. It was a question we kept getting, which is can you guys support us on the tax advisory side? Can you help on the compliance side, sales tax advisory, tax due diligence? So that was a piece that we have put together that's been really successful. I think for us, the next step we've started to see a real need on the software expertise side. As our clients grow, they need help scaling their financial operations, which really means getting the right systems in place to make sure that they are going to be able to get to the next step. So, the software that you're using, if you're a business that is, under 10 or under $15 million in top line revenue, is going to be completely different than the software you use when you're a business that's 25 or $30 million in top line revenue. So, for us, a lot of the things that we're getting asked to do is around the software implementation side. Can you help us? Can you help us implement NetSuite or a bigger ERP system? So I think for us, it's looking to become kind of those experts on those systems. We're already in there on the finance side, but helping get our clients to the next stage where they can actually implement those systems and actually get to a point where they can scale for the next 24, 36, 48 months. That's a really important piece of our next leg of growth as well. So we want to
Oh,
partner with them on that.
so much wisdom there, Eric. And by the way, again, you can learn more about Eric by going to expogroup.com, expogroup.com. You mentioned, what is the next thing the client needs on the stage of growth? I want to shift a little bit to when they're ready to exit. You mentioned tax advisory, right? And in particular, capital gains tax, right? Someone's built a company from zero to $100 million, and they're like, Eric, we're about to exit or to $1 billion, right? And it has this huge capital gains tax, especially you being, from New York, in New York. I'm originally from, Taxifornia, California. These are some of the highest tax states, right? Massive capital gains taxes. And so, what are some of the ways that you're supporting and helping your clients that are looking for solutions when they go to exit? And maybe what are some of the challenges that you're up against when it comes to, flexible strategies to let the entrepreneur be the entrepreneur?
Well, I'll tell you, in the beginning, like I said, a lot of our clients are, not profitable businesses, so they're oftentimes not facing any tax liabilities. But as they grow, they start to face tax, I would call, tax exposure on a couple of different fronts. One is on the income tax side, and making sure that they're efficient on the income tax side. And as we have a more distributed workforce, companies start to really have tax exposure across a bunch of different states and legalities, which is challenging. So for us, it's really helping to make sure that our clients are compliant at the state registration level, making sure that they are, when they're about to sell their business, making sure that they are all buttoned up from a tax exposure perspective, because that can actually be the thing that can reduce value in a transaction is, you get to the point of sale, and you realize that, you haven't registered in a lot of states where you're doing business, or you have employees in those states where you're not paying state tax, and that can significantly reduce the value of the business and cause you to have to potentially retrade. The other area that's really important that we begin to focus on pretty early, especially in the software world, which is where we have a significant cohort of clients, is sales tax. A couple years ago, sales tax in the software space was kind of the Wild West. There was not a lot of rules. States didn't really know how to tax it properly. They didn't know how to go after firms and know how to collect it. Now, states are starting to become more aggressive, especially states like you said, New York, California, Texas, all very aggressive on the sales tax side. So for us, our team every quarter for our clients will go and make sure that we're doing a nexus study that ensures that that when they reach a threshold that where they have enough tax exposure, that we're registering them in that state and making sure that they are collecting and remitting sales tax in that state so that they don't have any sales tax liability. That's really important, especially as a company grows, because we've seen a few instances where we're working on live deals and companies have significant sales tax exposure where they have either been doing business or not collecting sales tax properly in a state, and that puts them at a significant risk for sales tax liability. So I think for us is the best offense is a good defense in this sense, and we want to make sure that our clients are really ticked and tied from a tax perspective.
Okay, yeah, I think it's helpful. Yeah, so it's really income tax, sales tax, not so much on like capital gains tax, exit planning is what you're saying, if I'm hearing you correctly there. And
Yeah,
that makes sense. But it does fit in because if you're not taking care of those things and you go to sell, then they're going to do it in the due diligence. They're going to find it, and they're going to be like, dude, you owe all this money that you haven't been paying, or we got to start paying it as we go. Therefore, the EBITDA is going to drop, and
yes.
therefore the value is going to be retraded, and all of a sudden, they're going to be questioning everything else too. Like, what else have you guys are not, you're reporting that you're not actually, you're underreporting, right? Is that a fair summary?
Yeah, that's exactly right. I mean, we see it all the time. We have a transaction advisory portion of our business too. I know we didn't talk about that, but we also do financial and tax due diligence, often supporting buy-side investors. So those are typically either private equity funds or independent sponsors that are buying businesses. And during the tax and financial due diligence, one of the biggest things that investors are looking for is, were there expenses on the books that either shouldn't be there, or that may change once the business gets bought, or is there potential tax exposure that this business has that when we buy it we're going to be taking on, and that's a huge risk for an investor that's going to go purchase a business. So they need to make sure that the tax exposure is recognized, taken care of, and accurate, so that they make sure that they're putting a fair purchase price on that business.
Yeah, that's just the basic blocking and tackling of making sure that you actually have the true NOI, the true EBITDA, right? What are the actual expenses versus the reported ones? What are the ones that are missing? But you got to have someone on to do that. That's literally doing that all the time, like you guys, that can see the pattern recognition, that can address it, and then can compare and contrast versus other ones. And I think that's growing up, one of my first practices was multifamily brokerage, and so we would look at hundreds of properties over a period of 3, 6, 12 months, and we would underwrite in their financials, and then you just start to see the patterns, right? And you're like, wait, you're saying management expenses is not this, it's that. Well, all these other properties, 99, have at least this, or utilities are at least that, or even times sometimes utilities would be through the roof, and you're like, man, you have a water leak. He's like, what are you talking about? I'm like, your water bill is twice as much as the property down the street. And they go look and they go, oh my gosh, we've been leaking water, right? So the pattern recognition, have those that are in there seeing it, that can say, hey, these employees are X and Y and Z states, and if it looks like your workers' comp and different things are only or this percentage of it, this is out of whack, right? Is that a fair summary, America? Am I
Yeah,
catching it up? Yeah.
yeah. I mean, we do, almost all the deals that we do on the financial due diligence side these are businesses that are unaudited. So, in terms of the quality of their financials, it can be all over the map. Oftentimes, they may have a controller, they may have someone doing the books that is a relative of the founder, and then in terms of quality and making sure that the financials are GAAP, generally accepted accounting principles, and proper accrual-based accounting, the chances of that are relatively low. So for our diligence process, what we're doing is we're really going in there at the very base level. We're going in there and restating the financials to GAAP, making sure that the revenue is recognized in the period that it's earned, and expenses are being reflected in similar periods. And then we're going in and making any one-time adjustments to EBITDA so that to make sure that we're normalizing the business so that it looks how it's going to look post-sale, so that the investors are going to make sure that they're getting the purchase price that is fair. And for the business owners too, we want to make sure that, if it's a sell side quality of earnings, it's important to get that done too, because that gives them the opportunity to get the highest value for their business, if we know and have a good understanding of what their financials look like. What you don't want to do is go into a financial due diligence process where you don't have an understanding of what's going on with the business. That's just going to, cause frustration, potential retrade, potential opportunities for investors to cut you down on price. So you really want to go into those conversations from a position of strength.
Oh, 100%. I couldn't agree with you more. I mean, I think about just on like a multifamily property, if you bring it back to real estate, you want to do the pest inspection and the dry rot inspection before you take it to market. So, and you give a chance to clean it up beforehand, right? And address certain things or gaps that you're missing that are revenue things that aren't being recorded. It could go in your favor too, right? Having a quality earnings doesn't always mean you're going to find the skeletons there. You're going to find the gems that perhaps aren't being reported correctly or in the right category that can change the EBITDA in a positive way, and then it can increase the value. And so I think that's just really smart to do. And so I love that you guys do it. You guys are going in and you're looking for opportunities, you're looking for challenges. You're basically doing a SWOT analysis, right? And then finding out ways to increase the value before someone sells. Is that a fair summary?
Yeah, and exactly. And the work that we're doing is, like you said, it is largely financial and tax driven, but ultimately what we're able to tease out, and like you said, it's basically a quality of earnings workbook and then also a report. And from that report, what that report does is it gives a diagnostic of the health of the business from a financial perspective. But ultimately, too, our team will comment on, because we employ a lot of folks that are former Big Four auditors and CPAs. So really, what that does is it gives us a red, yellow, green, or it gives our clients a red, yellow, green on a lot of their business and financial operations practices. So like those things ultimately start to tell us and give us a picture of the overall health of the business.
Hey, Eric, so this is awesome. Let's shift a little bit. You mentioned about companies needing to raise funds, right?
Hmm.
Raise funds. There's banks they can get a loan from. There's venture capitalists. There's private investors, right? And they're bringing in this capital. I believe 2024 is the year of people needing equity, right? Needing equity now or soon, and it's like everyone's starving for breath, right? It's like it's oxygen, right? And people are starving for equity. A lot seems to be debt pretty readily available, but you got to have that hard cash to be invest into it, and so a lot of people are raising capital, right? And to me, that is focused on the actual cash on cash return, the business proposition. In other words, it's post tax most of the time, right? Now we like to say using capital gains tax solutions to unlock capital. It's sort of like that oil mine that's or that that's below the surface, and until you go down, is the capital going to come out, right? Through capital gains tax solutions, and this has to do with like Bitcoin, stock, business sales, real estate. We work with entrepreneurs that are selling the real estate asset to fund the business venture, or vice versa, or selling the Bitcoin to fund the business venture, right? Because they're deferring the capital gains tax. And so I'm curious, what would it mean if someone could exit, 65,000 a coin in Bitcoin or a big business or real estate or primary home, defer the tax and be able to fund their next business venture with no timing restrictions?
So yeah, and let me make sure I'm answering the question correctly. Main point of the question is sort of saying, okay, someone has a capital gain. They want to roll that gain into a new investment. Either how does that work, or how can we help?
Yeah, and so the big thing you're trying to solve for a lot of business owners that are looking to expand their businesses, right? They're looking to raise capital, right? Bring investors in, right? That next seed round, right? And the challenge is for the capital to get there is it typically has to be taxed. In states like New York, New Jersey, California, it can be, minimum 33 to like 50% depending on the depreciation recapture. And so a lot of investors are reluctant to invest because their capital is going to be taxed. And so if there was a way to tax defer into it, they're like, oh, all day long, right? And so I'll give you an example. I'll break it down. So we did a $8 million exit for a business owner in Colorado. At
Hmm.
zero basis, it was a C corp. their tax is going to be around like 35, maybe up to 40%. And they're going to get crushed with capital gains tax. Without our solution, they wouldn't have sold. Well, where do they want to bring the money? Well, they want to put the money in a passive real estate business venture, right, that someone else was doing. And so we use a capital gains tax solution. It's called a deferred sales trust to exit this business and really unlock the capital. And the capital, 8 million, could go into it. And so literally it would not have gone into it. And then all of it went into it, right? And so it's a different mindset. I'm basically solving the problem at the root cause to unlock this highly appreciated asset. I'll give you a couple other stats. 50% of the total net worth in America is tied to high-end primary homes, businesses, and commercial real estate. These are all illiquid assets that are mostly owned by baby boomers, of which 10,000 are turning 65 every day. There's about $84 trillion of wealth set to transfer in the next 20 years, and about 80 million baby boomers in the U.S. alone. And so a lot of these investors, versus having to get like VC capital or get it from a bank with higher interest, would come into deals if you could solve that problem. And so I'm taking that step back and I'm saying, wow, what a great way to do it, versus having to go and have to make a deal that perhaps you wouldn't want to make if you could have more of a private retail investor versus larger groups. If that making some sense, Eric?
Yeah, it is. I mean, I guess I don't exactly know how to answer the question. For us, in terms of, where we're focusing, we are really advisors to either the businesses that we work with, from more of like an internal perspective, or we are working with investors that are under LOI for those businesses. So, we're potentially coming into the equation, I think a little bit later than, kind of what you were describing in your scenario, which is the investor has already made the decision to, for let's say a lot of the growth stage businesses that we're working with, a lot of their funding comes from a couple of different areas, and we work with a mix of businesses. So we work with businesses that are venture backed. So they're accessing, equity capital, private equity capital, through, typically a fund. Sometimes we're working with private equity investors that are either buying a platform which is directly from their fund, or we're working with a private equity backed platform that is buying an add-on business. So again, using equity capital or a mix of equity and debt to finance the purchasing of a business. Or sometimes we're working with independent sponsors, just an independent person that was able to corral and organize enough capital for that purchase specifically, not so much a fund that they're working on where they have committed capital. It's just for that business. So for us, when we're coming into these situations, that is a little bit, it is already, the investment decision is actually already being made. And we are really coming in at the point of, you've already made this investment decision. How do we help maximize the value of the business from this point forward, now that this investment decision has been made?
Yeah, it makes sense, Eric. I'm thinking of like the nurse, right? And then I'm thinking like the brain surgeon, and I'm thinking like anesthesiologist, right? I'm thinking like all of the areas, and each of them have their expertise. And it sounds like you're saying it's like, look, they've already decided to have the surgery or go forward with the deal,
Yes.
and we're coming in as like the anesthesiologist to make sure that like they don't die during the surgery.
Yes, that's exactly right. Like we can provide a huge range of value and solutions for businesses, whether they're at the point of investment, or an investment has already been made and we're now going to help facilitate and help them scale from a growth perspective. That is all kind of within our wheelhouse. But I think from a step back is sort of like, working with folks that are now trying to help reallocate capital efficiently from a capital gains perspective. That's just a little bit earlier than where we get
That's
involved.
cool. It's all good. Yeah, no, and I
Yeah.
appreciate you sharing that. It gives me context. I'll give you one idea with this. And so to
Yeah.
me, it's price and terms, right? It's price and terms on every deal that the investor's looking to buy something, right? And at the end of the day, I always say we're not in the business of selling, advisory services, tax services. We're just in the business of solving problems, right? And so what's the seller's biggest problem when they go to sell? Well, the most expensive problem, I mean, it could be something personal, but the most expensive problem is tax, right? And so to the extent that you can equip and empower the investors, the buyers that you're representing or helping with this, it it opens up it's a game changer, right? Because there's literally deals that will not be sold if the problem's not solved. And if the person who's bringing the offer just says, hey, I have a creative way. In the old days, it was the 1031 exchange. The old days, people still use it, right? Hey, I'll cooperate with your 1031. Oh, that's great. I'm more likely to do the deal with the buyer. In this scenario, it's the business owner who's selling. They're like, oh my gosh, I would have paid 40% in tax of my proceeds if you brought me the idea and or just cooperated with it. It's a game changer, and they're more likely to sell the $100 million company for 80, right? Because they would have netted 60 beforehand. And so that's just an idea that I'm going to plant in whoever's listening out there, right? If you want to learn more, you go to capitalgainstaxsolutions.com. That being said, Eric, we're running out of time. You ready for the lightning round?
Okay, let's do it.
All right, knowing what you know now, if you go back to your 20-year-old self with the one gold nugget, make sure to tell yourself to do.
I would just say put your head down and work. It's really really important that you are going to be, you're going to have a lot of opportunities to make a change in your career, but once you're in a seat, you got to put your head down and work for a couple of years, and you'd be amazed what you learn and what you get out of that.
Awesome. Question number 2: what's the number one book you've recommended or gifted the most in the past year?
Ooh, in the past year, let me see if I can find it. Here, I can't remember the name of the book, but it was basically a book about sales strategy, and I can tell you a little bit about it. Main thing is sort of like it's trying to create a dichotomy between sort of this high velocity marketing sales strategy and then sort of the slow sales strategy, which is relationship building. And it tries to strike a balance in between, and it talks a little bit about the love letter. And I think that's an approach that, I try to use a lot with folks that I'm trying to work with or relationships that I'm trying to build, which is you try to strike a balance over time, which is you're not going to get anywhere in what we're doing with high velocity. We need to build relationships, but also we may not have time to build a relationship over years. So we try to strike a balance and write a love letter to the folks that we're trying to work with, try to find areas of common ground, and that really helps us get in there and start to build a relationship with them quickly.
Awesome. I'll have to check out
I will find the book. I will find the book, and so you can post in the show notes.
Okay, cool. Awesome. Next question. What are you most curious about right now?
I think the thing that I'm most curious about is, in the markets that we work in private equity, in venture capital, there's a big repricing going on in those markets. You had a lot of really risk-free capital that was going out the door to fund these businesses. Debt was very, very cheap, and it facilitated a lot of growth in the private markets. Then, you sort of had that Wild West going on in the end of 21, beginning of 22, where everyone's trying to do deals, and there was a huge amount of pricing valuation that spiked. And now you're seeing a repricing in the market. I think the thing that's really interesting to me is what's going to happen now in the private markets for earlier stage businesses or growth stage businesses. How are both investors and businesses going to be able to find a common ground where they can get transactions done? Because there's right now a huge gap in between businesses that think they might be worth much more than what they actually are in the market, and investors now that are really can pay a lot less just given the price of capital, given how much valuation and multiples have gone down. So what I'm really interested in seeing is how this is going to play out over the next couple of years. And can the private markets get their groove back in terms of doing deals and helping early stage or growth stage businesses find capital.
Awesome. I couldn't agree with you more. And by the way, I think that part of that gap is that capital gains tax. So kind of a little plug again for what we're doing. But last question. After all your success helping all the people you've helped, what's the number one way that you stay best centered in your values and stay encouraged to charge forward to reach even higher heights?
Biggest thing for me is, when we try to build a business, I want to build a business that I want to work at. We want to make sure that we hire good people. And the biggest thing for us is, we try to build a nice culture. We try to build a firm where people want to stick around. And so I'm really focused on building a business that has a great culture, where we have nice people that want to work here and grow their careers, and where we're really sound and ethical, and we can provide our clients with great advice. So that's the biggest thing for us, is like I'm trying to just build a sustainable business and hire great people.
Love it, Eric. I want to thank you so much for being on the show. It's been awesome. I mean, I think we covered a ton. There's a lot of questions, and you were incredible with your background. I want to encourage you to keep having your superpower. Connecting people, building teams, right? Taking care of others too, and not forgetting where all the other places you worked, and bringing people together and helping everyone to basically build trusted advisory teams. This is what you do. It seems like it's just your superpower, right? So it's amazing. For our listeners who want to get in touch with you, would you remind them one last time what's the best place for them to find you?
Uh, just either our website, we have a contact us form, www.expogroup.com. It's EXB as in boy O group.com. You can reach us on LinkedIn or directly on our website, and we're always happy to have a chat with business owners or investors that are looking to get some higher quality strategic financial support for either their business or a business they're working with.
Awesome. Thanks, Eric. I also want to thank our listeners for listening to an episode of the Build to the Billions podcast. Again, we believe that many entrepreneurs and investors who are successful, right? Sometimes on their journey, they're figuring out how do we scale from millions to billions. And we believe that the key to this is to scale your wealth and compound your wealth. Starts every day with a mindset of stewardship over ownership and applying billionaire principles. And I believe Mr. Eric Fiegoli absolutely delivered today on billionaire principles with everything we talked about today. I want to encourage you to take the wisdom and build a team, or even consider hiring Eric to help you build that team, be that team for you, so you can compound your wealth and you can make a more impact with everything you're doing. Thanks so much for watching or listening. Please share this so someone it could be of blessing to, and we'll talk to you again real soon. Bye now.